fixed assets related interview questions today. So, what are the different ways of adding asset to the fixed assets? Okay. So, the answer will be there will be quick addition, there will be detail addition, and there will be mass addition. Okay. So let us go one by one. In quick addition, I think probably you can quickly add asset without providing many kind of a detail related information, right? And later on you can provide those informations based upon the requirement. So use the quick addition process to quickly enter the ordinary asset when you must enter them manually. You can enter minimum information like quick addition window, and the remaining asset information defaults from the asset category book and the date place in service. Okay. The second way of adding asset to the fixed assets will be the detail addition. With the detail addition, I think you can able to provide all the information apart from whatever we have provided in the quick addition process. It's more of like asset that have a salvage value, asset with more than one assignment, asset with more than one source line, asset to which the category default depreciation rules do not apply the subcomponent asset and the leased assets and leasehold improvement. Apart from your detailed information, you can also provide all these basic informations, right? And in the mass addition, it's more of like coming from the accounts payable module where you can run this mass addition program. Particularly from the accounts payable module, when you have assets in place, whenever you run this process, you need to make ensure that in accounts payable the create accounting for the assets has been done, and apart from that ensure that asset clearing account has been provided for those assets, whether it's asset clearing or CIP clearing, either way, right? If it is a CIP asset, it has to be CIP as a clearing account. If it is a asset, it has to be asset clearing account. Okay. Now, once this is provided, you can have your project asset information, which is coming from the different sources, right? So more of like through the mass addition program, you can able to add those asset into the system. It could be it could be from your AP, or it could be from different sources, which is more of like the FBDC the Oracle provides. Fill in those informations, and you can able to add those information and load it to the Oracle system from any kind of a third party you are having, and then load it to the Oracle system. So this is how you can do the mass addition through various sources. The data will be coming into the Oracle asset module. Okay. How do we depreciate asset in Oracle application? Okay. So basically, there is a program called depreciation program which we can run it, and in the depreciation book, if you go down in the drop down list below, there will be a depreciation book. Under that, run depreciation, you can do so. And once you run the depreciation program, system calculate the depreciations, expenses, adjustment, and whatever the requirement as per the asset book, and update the accumulated depreciation and year to date depreciation. Okay. So how we can run the depreciation? Basically, you can just depreciation window. I mean, I think you can go down to the asset book, and drop down list. Just click on the depreciation and click on the calculate depreciation. I think for that month, the depreciation will be getting calculated. Other like the capital gains and loss based upon the depreciation, it will be calculated based upon the requirement. Yes, in Oracle, we have a journal entry reserve ledger report, which is nothing but a depreciation report. We can run it to ensure that all the depreciation which has been run into the system, you can view it for any kind of a financial purpose. What is the significance of asset book in fixed assets, and what are the types? Okay, see, asset book significance is basically you can have more of like. Um, Asset, you need to track your assets, and you need to depreciate your asset, retire your assets. So all sort of informations which are related to the fixed assets, there is a separate module provided by Oracle, and that module you say fixed assets. In that module you can maintain with the books, with the asset book, you can do all sort of fixed assets transactions, right? And transaction could be your adjustment, reclassification, then it will be your depreciation adjustment, then you'll have retirement, reinstatements, all sort of fixed assets related information and impairment, anything you can able to do so within the fixed assets module. So ideally, there are three types of fixed assets book are there. One is a corporate book, second is tax book, and third one is the budget depreciation book. So based upon the country's requirement, we can create all these, books, actually fixed assets books into the system. And but it's all country specific. If you have a different reporting structure as far as your tax fixed assets component has to be reported at, other than the corporate, you can define these two fixed assets books differently. How you can define a depreciation book is basically in the book control window. Just open that book control window and provide your parameters over there. What is name of your book you want to define, and it has to be contain no, not contain any special character. You need to ensure the maximum character limit is 15. Enter a brief and unique description of the book. Choose a corporate or a budget book or tax book classification based upon your requirement. Enter calendar information for your book. Enter accounting rules for your book. Enter natural accounts of your book. Enter tax rules for your book, and save your work. Okay. What is meant by retire asset? How do we retire asset in Oracle application? See, basically, retire is nothing but you want to decide, right? I want to, retire this asset either, partially or fully. You can do so. Okay. So Oracle provides full and partial retirement by two way, either by unit or by the asset cost. You can retire any kind of asset, particularly, fully or partially. So when you retire an asset by units, Oracle asset will automatically calculate the fraction of the cost which has to be retired. When you retire an asset by cost, the units remain unchanged and the cost of retired is spread evenly among the all assignment lines. Let us see what are the restrictions for that. You cannot retire asset by units in your tax book. Remember, this is very, very important. You can only perform the partial and full retirement in a tax book. Okay. And also you can only perform full retirement on the CIP asset. You cannot retire them by units or retire them partially by cost. If you perform multiple partial retirement on an asset within a period, you must run the calculate gain or loss program between the transactions. Okay. So the gain and loss would be like, the proceed of sale minus your cost of removal minus your net book value retired plus your revaluation reserve retired. So it is as simple as that. Whenever your gain or loss has been calculated, the proceed of sale, if you're selling any kind of assets, right? And what is the cost you have incurred for the removal of the asset, it has to be minus from the original sale of the asset, and remaining the net book value of that asset has to be also minus. Plus, if you have any kind of a revaluation reserve, right? Your asset is of a other than your local currency, it's into the foreign currency. So in that case, what is the revaluation, parameter of the amounts, it has to be calculated before that. Okay. So next is, if you retire, if you partially retire a unit of production asset, you must manually adjust the capacity to the reflect of the portion retired. Okay. So this is basically the overall detail of how we can do the retirement. You can do one retirement at one go, or you can do a mass retirement, provided Excel file which is incubed with the Oracle Financial tab, more of like the PDI file. You can just click on the mass retirement, provide the asset related informations, all the asset related information. If you have bulk asset you have to be retired, right? You can use this mass retirement window option, and that is going to allow you put on all your details like the asset category, key, location, and everything. All sorts of details you'll have to mention over there. Once you provide that asset, right, it will pick up all those information by default, right? And finally you can able to retire this asset based upon your unit cost or asset unit or asset cost. There will be some exceptions like assets with the transactions dated after the retirement date you enter, assets that are multiply distributed and one of more values to meet the mass retirement selection criteria, and for the reinstatement assets retired during a prior fiscal year, it has to be independence across the depreciation books. Okay. What are the retirement and reinstatement status? Basically, if you want to reinstate after a retirement has been done, right? Something wrong has been done and wrongfully a user has retired a particular asset and you want to reinstate that particular asset, right? You can do so. You can go down to the reinstatement. You can use that particular retired asset and you can do the reinstatement again, so that the asset will be come back to the original. Um, original cost of net book value what it has before the retirement. Okay, so these are basically various conventions we will discuss later on. We are going to see the accounting entries today particularly. Okay, so what are the various journal entries normally you can answer within the fixed assets module in terms of your interview related questions, right? So say for example, if you have any kind of fixed assets, right? So within the accounts payable module, the accounting entry will be like in your AP invoice, it will be asset clearing account to your accounts payable liability account. Okay. Now, say for example, if you want to add that asset within the fixed assets module, which is coming from your accounts payable module, right? The accounting entry while creating that asset will be your asset cost account to the asset clearing account, right? 4,000. Now, say for example, if you have this asset just in this month, there will be no depreciation. But if your date placed in service is more of like before 2 months or 3 months, in that case whatever depreciation has been due, system calculates that automatically. So while creating the asset itself, it will calculate the extra journal entry which will be like your depreciation expenses to the accumulated depreciation of $250. Okay, that is how it has to be the treatment. See, this is again Okay, so again, this is for the again one more scenario has been provided. If it is a again prior period addition, what will be the accounting entry? It will be your asset cost to depreciation expenses. Again, there will be adjustment if it is more than the the current period, right? Then in that case, what will be the impact of that? Okay, let us see. So in that case, there will be depreciation expenses adjustment. It's more of like all the prior periods apart from your current period, and accumulated depreciation will be the total of all these two, right? Your current one quarterly plus the before one quarter. So here the example has been provided based upon quarterly, okay, quarter one, two, three, four. But normally, if you have monthly, the scenario different. The scenario will be like this, the scenario will be like this way only. Okay, if you have, because normally in monthly scenario, monthly depreciation expenses 1 or 2 months it will go down to this way, depreciation expenses to the accumulated depreciation. However, if you have quarter one, two, three, four kind of a period, in such a scenario the scenario is going to be changed. You will have adjustment comes into the picture based upon the period adjustment, right? Because there will be 4 quarters only, right, in the depreciation way. Okay, let us go down to the next. Yeah, this is also the same scenario as you can see. When you merge two mass additions, Oracle assets add the asset cost and the mass addition that you are going to merging with the asset account of the mass addition. So what is the scenario? Let us try to understand over here. Whenever you have addition of two particularly lines, two source line from the accounts payable, right? So say for example, asset clearing, as you can see over here, this is one line, this is one line, because it is coming from accounts payable line, right? Two different lines. The moment you merge, system is going to create only one line of 4,000. Okay, and the remaining 1,500 is standing for the depreciation expenses account. It is pretty much simple. You can figure it out because there will be two AP line invoices, right? And you have merged the these two lines into one line. So in that cost, the asset cost will be only one line system will create. Okay. Okay, for the CIP asset, normally CIP is nothing but we say in short form, it's construction in progress. CIP assets are termed into, it will be treated as CIP cost to the CIP clearing. Okay, so let us see. Whenever you do the capitalization of the CIP assets, right, it will go down to the asset cost account debited to the CIP cost, and the depreciation expenses again debited to the accumulated depreciation. More of like if any adjustment will be there, it will be treated as like the adjustment related accounts. One more scenario. As you can see, you are going to change it from the, you are putting into the CIP cost. Basically, there is a CIP asset, right? Which is coming from your AP, right? So in that case, or it is coming from your projects module. This will be your accounting entry, CIP cost to the asset clearing account. Okay, let us see now the retirement journals. The retirement journals is particularly whenever you retire any kind of asset, right? What will be the treatment of that? Let us see that. So it will be like whenever you are selling that asset, right? It will be accounts receivable accounts get debited and your proceed of sale clearing accounts gets credited. Okay, of 2000 USD, as you can see over here. Example is that you place an asset in the year one, quarter one, and the asset costed 4,000. The life is 4 year, and you are using a straight line depreciation. Perfect. In year 3 and quarter 3, you want to sell this asset for 2,000. The cost to be removed for this asset is $500, and the asset you use it for the retirement convention and the depreciation method, which takes depreciation for the period of retirement. You retire the revaluation reserve in this book. Okay, so I have a set of understand this scenario. I have a set of $4,000. After 3 years of service and quarter, I have decided to sell up this asset at 2,000 USD value. And what is my cost of removal, which is 500 rupees only. 500, not rupees, dollar, $500. Okay, so as you can see, I'm selling this asset at 2000 USD. My selling accounting entry, it will be accounts receivable module to the proceed of sale clearing account 2000. Now as you can see over here, the selling has been done. What is the cost of removal? As you can see, the cost of removal clearing is 500 USD, and which I have incurred especially when selling up this asset, because this is a cost to me, cost to the organization. So the accounting entry will be cost of your removal clearing account debited to the accounts payable, $500 each. Now this is your total retirement with the sale scenario accounting entry. Let us try to debug it and understand what is the overall accounting entry over here. Now, out of 4,000, you have a net book value of how much, which has been, so far the accumulated depreciation we have done 2,500 for that asset earlier. It has become debited. Okay. Now we have sell this asset at $2,000. This has also become debited. Okay. We have sell this asset to the any kind of a customer, and cost of removal 500, which we have put on extra based upon our requirement of selling of this particular asset. What is the revaluation reserve? If it is more of like a foreign asset, a foreign currency asset, the revaluation reserve comes into the picture. You have 600. And what is the net book value retired gain is 1500. Okay, out of selling this asset, what is the remaining 2500 was your total. 2500 has been done so far, depreciation has been accumulated, so the remaining is your net book value retired gain. Now what is the asset cost of the initial when we borrow it? It is 4,000, which has been credited 4,000 over here. Proceed of sale gain is $2,000. Against this sell clearing, we have done the 2,000 USD. We have sell this, and cost of removal clearing 500. Revaluation retired gain 600. Okay. Now this is the wholesome entry, and if you try to analyze each line one after one, you can able to understand each of the impact of this entry, right? You can see over here, your cost of removal is debit this side 500, which you have put on the expenses side, right? So cost of removal clearing 500 gets nullified ultimately, right? Now cost of removal gain has become debited because that's your expenses, right, which you have provided, because this is a clearing account, more of like intermediate account. That is why it has been nullified with both the side. Cost of removal gain is more of like debit. Why? Means because it's a loss to me, it's expenses to me, and therefore it's a debit on it. So the accounting impact is the correct one. Now I sell this asset with 2000, proceed of sale gain is 2000. Now as you can see over here, again, this is an intermediate account, proceed of sale clearing, because you have sold this asset and this is a clearing account. This intermediate account 2000, with this 2000 gets nullified, right? These two debit and credit side. So automatically what remains is proceed of your sale gain, which is a $2000, right? Which you have sell ultimately to the vendor. Now, say for example, if you remove this is I'm just removing from here, and this is I'm just removing from here, because these are all more of like uh, you can say clearing account, intermediate account, right? And now you can understand this entry. Asset cost is 4000 total, which I have retired and sell it off to the vendor. 2500 is accumulated depreciation, which has already been done. I have reversed this. Against that, I have sell it to vendor at 2000, and 500 is my cost of actually removal process 500. Now 600, as you can see, this is my revaluation reserve created out of the based upon the foreign currency revaluation reserve. And this 1500 is nothing but the asset net book value what you have as on that day before selling and retirement of this particular asset, before you sell this asset, right? So this is the wholesome scenario, as you can see. Okay, just try to analyze this entry. You'll get to know a lot of things out of this entry. Okay, if you enter the same account for each gain and loss account, Oracle Asset create a single journal entry for the net gain or loss and shown the following tables. Proceed of sale 1000, cost of sale 1000, net book value 1000, revaluation reserve 1000. If you enter the same account for each gain and loss account, Oracle Asset create single journal entry for the net gain loss in the. I think this is more of like a same amount it is saying, right? If you incur the same amount other than the scenario, right, what you discussed earlier. So this is how the treatment of the accounting entry it will be, and this is also the accounting entry treatment. Let us go down to the next. This is more of like the same scenario, as you can see over here in quarter one, how it has been, dispatched, or I mean, sell it to the, customer, right? When you sold up this particular asset. So this is another scenario, right? This is in quarter one, year three, quarter one. So the difference on the top and here will be quarter three to quarter one, and based on that, the accounting entry is going to be changed based upon these values. Okay. So the next one is you discovered that you retired a wrong asset. Correct. Oracle Asset create a journal entry for the reinstatement to debit that asset cost and credit the accumulated depreciation and reserve the gain and loss you recognize for your retirement. Oracle Asset reserve the journal entries to proceed and solve cost of removal, net book value retired, and revaluation reserve retired. So okay, fine. So this is more of like if you have retired asset, what will be your accounting entry? Asset cost is 4000. Cost of removal you have expense to put on that. What is the gain and loss on that asset? Depreciation expenses 250. You are completely retiring this asset. You are not selling. I think this asset. Okay, your discover this is the only retirement entry. Okay, so more of like the accumulated depreciation what has been so far done to the asset, which has been credited 2750, proceed of sale clearing 2000 rupees, and revaluation reserve 600. Try to analyze this entry. This is similar to other entries, based upon only some scenario has been changed. This is a retirement entry only. Okay. So let us see what is next to what we'll have. Journal entries for the depreciation. Yeah, this is more of like a scenario where you run a depreciation Oracle asset creates a journal entry for your accumulated depreciation accounts and your depreciation expenses accounts. Oracle asset create journal entries for your bonus reserve accounts, okay, and your bonus depreciation account, if any. Oracle Asset creates separate journal entry for the current period depreciation expenses and for the adjustment to the depreciation expenses for prior period adjustment, transactions and changes to the financial information. Okay. So try to understand here. Oracle Asset create the following journal entry for a current period depreciation charge of $200 and a bonus charge of 50. Okay. So what will be the scenario is more of like a depreciation normal entry will be your depreciation expenses 200 US dollar to the accumulated depreciation $200, and there will be bonus expenses based upon the scenario provided over here. It will be $50 to the bonus reserve. Okay, that this is the overall accounting accounting entry for the bonus depreciation kind of a treatment. Journal entries for the revaluation, let us try to see. I think what will be the accounting entry you can see over here. Okay, so this is all this based upon this quarterly, all these amounts. I'm not going in detail to this. Let us see the directly accounting entry. So the accounting entry will be your asset cost to the revaluation reserve and accumulated depreciation. Okay, if there is a revaluation, right? So what is the revaluation system calculates based upon the this dates capitalized and the period based upon this period, and your revaluation is going to be calculated based upon that. Okay. Revaluation 2, if you have 10% revaluation, what will be the impact in year 4 and quarter 1? It will be like revaluation resolved to the debited and accumulated depreciation gets 630, then you will have asset cost to 1050. And here in accumulated depreciations get the total amount of 9450 to the asset cost account 9450. Okay. So these are various accounting entries and the treatment. This is also revaluation kind of a treatment entry. Okay. Okay. So let us see some more questions. At what level FI is being implemented? The FI is being implemented at the business group level because of the one business group. There will be one asset module. I think this is more of like at the lesser level. You can understand at the lesser level, we just assign a fixed assets module. Okay, and what is the profile being used to secure asset register? So this is the information standard 4.4. The custodianship requires the agencies to establish and maintain the information asset register. An information asset register list that existing information assets across of all the business units within the organization. It enables users of the information to identify the available information resources from a single source and provides information custodian with an overview of the information assets under their care. An information asset register ensures the agency information is identified, defined, and organized in a way, particularly that will facilitate access and to reuse this information again. A register is going to assist to avoid any kind of unnecessary duplication of the information. Okay. So what are the asset type of fixed assets module? You have capitalized asset, CIP asset, and expense asset, right? So three types of various asset type you can see within the fixed assets module. What are the different calendars used? Yeah, there will be three types of calendar. One is your yearly calendar, and one is your monthly calendar, and one is your pro-rate calendar. Okay, so pro-rate calendar you need to understand basically why Oracle provided pro-rate calendar. You want to say for example you acquire asset as on 15th of this month, 15th of August. Now system, do you want to calculate prorate depreciation based upon the date placed in service? So in that context what will happen is It will calculate the the remaining 15 days of this particular asset which has been captured as on 15th of August for this particular month, and next month onwards it will be like monthly depreciation, right? So that is how the treatment it has to be. Okay, there'll be yearly calendar which is will be in sync with your GL calendar, that we say normally. So the yearly calendar is more of like it has to be in sync with the GL. The monthly calendar also in sync with the GL. It could be differ also the monthly calendar based upon the requirement of the business, and prorate as per the organization requirement. We can maintain a prorate calendar, right? The challenge here, what you'll have in fixed assets configuration, I'll tell you, if you have a 445 calendar, this you track it, because 445 calendar you need to ensure, right? The calendar has to be sync across the GL, FA projects, and any other application, right? This significantly pose a huge challenge whenever you implement any kind of a project other than your monthly, quarterly calendar. So this is going to be challenging, and need to ensure that you follow the right dates in terms of having this 445 calendar. And these are the definitions, how you can just have this calendar definitions. So that's all about fixed assets interview questions. Thanks for watching. Have a good day.